Welcome, ladies and gentlemen, Precious Metal Summit 2018 here in Zurich. And now with me here is EMX Royalty, and Eric Jensen, the General Manager of Exploration, wants to give us an update and insight into his terrific company. Welcome.
Yes, yeah. Hi, thank you. Thanks for the time
Great
to talk.
to have you here. Fantastic. EMX Royalty, I mean, the name implies it already. You're a royalty company. Maybe you can give us a short overview on the company.
Yeah, that's right. So years ago, we were known as Eurasian Minerals. But what the company does is we generate royalties. And so we do exploration, we acquire exploration projects, we sell those to other companies and keep royalty interests. And in doing so, we built a global portfolio of royalty interests. So we put that into our name so that it was more reflective of the nature of our business, so people had a better understanding of what we do. So Eurasian Minerals, the stock symbol is EMX. We renamed it EMX Royalty Corporation to reflect that.
Which makes absolutely sense.
The core of our business approach.
Fantastic. So royalty business, I mean, it's a lovely business. Yeah, we know quite well. Cisco Gold Royalties, for example, which is one of the real large players in that sector.
Yes.
But the point is you invest and then you get lifetime, you get money back. So where's the investment focus for you now, and how many royalty agreements you have ongoing now?
Oh, that's a great question.
Cash flowing.
Yeah. So we have several cash flowing royalties from some assets that are in production, but we have a global portfolio of about 103 royalty and mineral property interests around the world that are in various states of advancement. And through time, more of those will reach the production stage. So we have several paying royalties at this stage, but we also have a big portfolio of assets that pay advanced royalty payments. When we sign these agreements, we're very careful to put those terms in. So we don't even have to wait till production in our portfolio. A lot of our portfolio cash flows prior to production.
Yeah, fantastic. So how much cash flow do you generate per quarter now, for example? How does it look like? What is your margin on that? And do you also getting, let's say, physical metal and cash, or only cash?
It's cash. We do have in-kind arrangements in some of our agreements. So if we want to, we can take bullion as well. But right now, if you count the pre-production advanced royalty payments and our royalty cash flow, it's $4.5 to $5 million a year. But it's growing through time. And this is something I wanted to point out to the viewers, that our cash flow is growing through time, and it's going to continue to augment. And also through asset sales and strategic investments, we've built a big treasury. We have $65 million in the bank, and we have all this cash flow as well. So the cash flow pays for our operations, and the rest we can use for investments.
Fantastic. So when you say you use it for investments, 103 assets, I would call it, you have so far. Are you also buying into the equity of companies, for example, to say, okay, this is the market low, let's maybe speculate a bit when we buy at the low? Copper prices should rise. We know that all gold, silver should rise. Yeah, it makes no sense, those deep levels. Are you doing something like that also?
That's a great question. That's one of the cores of our business approach. One of the three things we do: royalty generation, royalty purchases, and strategic investments. And that part of our portfolio, the strategic investments, have generated fantastic returns over the years. And that really helps build our treasury through time. So yes, we do that. And now is a great time because, as you say, there are so many companies out there that are
cheap.
Yeah, they're struggling. They have good assets, good management. We'll make bets like that, and we'll do very well. We've done very well historically. Great question.
As you said, you are working worldwide. Would you also touch, let's say, a bit more tricky jurisdictions, like let's call it Africa, if you want to do that, or if you name it, let's say, South America, for example? Is that something you would touch, or do you say, we have so much expertise, we are more, let's say, focused on North America, maybe a little bit of Europe, Australia, meaning the easier jurisdictions?
Exploration is about risk management and diversification. And so what EMX is known for is we have plenty of exposure in safe jurisdictions like Scandinavia, the United States, for example. But we are willing to put some of our investments into more challenging jurisdictions because the returns can be fantastic. Years ago, I would have said one of the last places we'll go is Russia. We made a big investment in Russia that did very well for the company. So we had nice returns from that. So yeah, I don't think that there's a jurisdiction that's off the board necessarily, but we have to balance that risk and be thoughtful about it, of course. But yeah, we're willing to try places like Haiti. We had a lot of value is derived in our company's early history by investing in Haiti at a time when no other companies would look at that. So it's a balance. Safe jurisdictions for long-term stability, but then you can also recognize great returns by taking some chances in some other jurisdictions, as long as it's balanced.
So out of those 103 assets you have, how many are cash flowing now, and how many you think you can bring in 2019 into cash flow?
Oh, that's a great question. So amongst the portfolio, so about I'd say 60% of those projects are in agreements of various forms, and the majority of those offer some form of cash flow, advanced royalty payments, staged option payments, stuff like that, but also the royalties that are cash flowing. So we have several royalties in production, but a big percentage of our properties in agreement also cash flow in these other ways, and so a big portion of our portfolio cash flows right now, which is great. That's we're doing our job if it does.
You did it right. And let's talk about the metals.
Yes.
What are your favorite metals? I mean, we know from a lot of companies they are more like, let's say, on the gold and silver side, meaning precious metals. Yeah. But I could imagine also industrial metals, especially copper with the e-mobility. That makes me a lot of sense because I think copper is heavily undervalued.
We absolutely agree, and actually copper is one of our specialties. Our technical teams are known for the prowess in copper exploration. We're known globally for that expertise, and so that is a focus. Copper and gold are probably the main commodities that we have exposure to, but through the years that we've been doing this, we've also gained diversity. We have zinc, lead, zinc, silver assets. I've been building a big portfolio of nickel assets because I think nickel properties have been undervalued.
The battery technology, the new one. Wow.
Precisely.
I love it.
Yeah, so we have new exposure there. We've actually built a pretty big portfolio of those assets. So diversity is important. Copper and gold is a focus. It's the core of our portfolio, but we have exposure to the other metals as well. That'll grow with time as our business continues to expand.
Yeah, fantastic. So that means you have precious metals, but also the battery metals.
Yep. Yeah, we like battery metals.
That's the future.
Yeah, well, I started investing in these things a couple of years ago because you could see what was going to happen in the market. So that's a strategic approach we've been taking. So
fantastic. So I know it's a forward-looking statement, but maybe you can give us an idea, I would call it. What would be the growth profile for the next 2-3 years concerning your revenues, meaning what you are getting out of the royalties? What could a shareholder get when he invests in you?
Good question. So right now that return is about $4.5 to $5 million top line on the royalty part of the portfolio and those advanced royalty payments, et cetera. That's going to continue to grow. That's been growing through time. And our returns from our strategic investments are lumpy, but those are significant and they add a lot to the bottom line of the company as well. So we'll see the steady augmentation of the royalty cash flow, which has been growing, but also we'll get these lumpy returns, which are in addition to that, which are bonuses.
Which are one-time returns, of course.
And look at our treasury, and that tells the story right there.
Absolutely. And you said 65 million is in the bank, right?
Yep.
Yeah. Okay. So what's up then next? What are you doing with that? I mean, you could pay a dividend. You can buy back shares because also your shares suffered from the market, of course.
That's right. Yeah, we believe, like a lot of companies, we're heavily undervalued. We have a $35 million enterprise value right now with $65 million in the bank.
But that makes no sense to me.
Exactly. So at this point, we think we're heavily undervalued. So instead of issuing a special dividend, I think we'd be much more inclined to look at a share buyback at this point in time. In the future, as our proceeds continue to grow, our cash flows grow. Yeah, we're thinking about a future dividend that would be quarterly or something like that. But there's no specific plans in place for that.
It's just an idea.
Yeah, it's an idea, but we're heading that way because our cash flow is increasing. So we have to start thinking along those lines. But the major thing is that the company's really well funded. We're going to make very good strategic decisions with that money, as we have in the past. We've made some really good investments in the past 5 to 6 years, and we're going to continue doing that. All with the interest of advancing shareholder value. I'm a big shareholder in the company.
That would be my next question. What is management involved?
8.5%.
Okay, all together or you?
No, I wish it was. I really wish it was just me, but all together is 8.5%. But some of us are buying the market right now. We believe our shares are undervalued. We think it's
makes sense. Absolutely. Who are your other large shareholders?
Great question. So our largest single shareholder is Paul Stevens. So he's based out of California via his investment fund and his personal accounts. He accounts for about 19.5% of our shares. And then Rick Rule and the Sprott Group, of course, they have 10% of our shares and about another 14% in their client accounts. So EMX Management, Paul, and Rick's and
that's
Sprott,
almost 50%.
That's more than 50%. So we're tightly held by a committed group of shareholders, including me.
That's important. No, I mean, because you are so dirt cheap, somebody could get the idea, why wouldn't we buy the company?
It'd be hard to do that because of that committed group. And
that's the point.
I'm one of them you have to convince. So well, make us an offer. $20 a share, I think we can get a deal done.
Well, this is no doubt. For the right price, everybody is saleable, right?
Well, we built a great vehicle. It's cash flowing nicely. We're driving a lot of value right now. It's fun. It's a fun time.
Perfect. That was a perfect last sentence. Thank you very much for that.
Cheers.
And keep it going, and we look forward to your next investments and next ventures. Then
that's right. Keep watching our news flow. That's right. Yeah, always generating interesting news. So always keep an eye on our news flow. And
yes,
I look forward to it.
Thank you very much.
Cheers.
Yeah, ladies and gentlemen, there was Eric Jensen from EMX Royalties, and you heard it. The company has 103 assets and a lot of cash flowing already. So 4 to 5 million are flowing into the bank every year already, paying the bills, which is very nice to have, taking off the risk of the company. But 65 million in the bank, 35 million is the market cap. So that's ridiculous.
Sorry, market cap's 103. The enterprise value is 35.
35 enterprise value. Okay, I mixed that up. But anyway, the point is, this is way too cheap. So I would suggest check out the company. Thanks for watching us. Bye bye from Zurich.
Cheers.